Good afternoon. My name is Alejandro Zambrano from ATFX in London. Let's take a look at some of the key economic data released overnight. I'm talking about the China Caixin PMI figures, which improved and has been causing stock markets to rally higher. We're also going to talk a little bit about the US ISM indicator, which is going to be published in the next few minutes to give you an idea of what to look for when that number is published. So let's take a look at the China figures first. And we had the official figures out already over the weekend. And then on Sunday morning, we had the Caixin manufacturing PMI figure. Now, this is a private indicator. It's the same team as market PMIs, which are the same PMIs we have in Europe. Now, people trust these more than the official figures. And if we look at these numbers here, we can quickly see here how we had a very strong move to the upside here in the PMI indicator. We had a low here just a few months ago as stock markets were plummeting, but after that, with stock markets rallying, we've seen the PMI figures moving to the upside. And this is the same idea I shared with you guys about 2 weeks ago in the video, The Remarkable Rise of Stock Markets, which is that stock markets peaked in October, then traded to the downside, probably because people suspected that we would have maybe lower economic data. But what is also interesting is following that bounce in stock markets, we have seen an improvement in the data, and we haven't had that imminent recession that people are talking about. Now, there are other indicators like the inverted yield curve that still suggests we may have a significant slowdown, if not a recession in the US, but we're not there just yet. And that is why stock markets are trading the way they are. Now, Caixin PMI bottomed out, as it looks like right now. And something you can keep an eye on over the next few weeks and months is the LME index. That's the metal index here in London. And you can clearly see here how we have a nice and relatively stable correlation between the Caixin PMI and these metals. The reason for this is that China is a large manufacturing economy, and they use things like copper to produce their products. And you can clearly see here how the index and metal prices bottomed out in January. Pretty much after that, we saw the move higher in the China PMI. Now, later today, we're going to have the US ISM manufacturing figures, and you can see how just about August last year the index was clearly above 60, and then we had a very significant slowdown, and the last reading for February was bad, and the one in December as well was also bad. Now, these numbers look pretty much as we've seen in places like Germany and places like that, so it's not looking that great. Now, this, as you can see, this figure here, I don't know if you can see it, but the scale says 54. So we're actually far away from the 50 level, which is the actual level that matters for the economy. Now, most people say that we will most likely have further moves lower here. And that could, of course, be causing stock markets to trade to the downside. But the way the markets are treating things right now, it's actually the opposite. They don't really think we're going to have that slowdown. So let's see when the figures are out in the next few minutes. And let's take a look at something like the Dow Jones Industrial Average. This is Dow Jones Industrial Average. And you can see that we're relatively close to the 2019 high at 26,238. A break to that level may potentially open up a further rallies going forward. That is if the ISM most likely beats expectations. If it fails to meet expectations and declines below the levels we've seen, for example, in the prior month in February, then that could cause shockwaves across the system. Thank you so much for watching, and don't forget to subscribe for more videos like this. Thank you.